Is it possible for one of the biggest luxury companies in the world to be on sale? Welcome back to Money Journey, where we hunt for the best investment opportunities in the stock market. Today we are looking at a giant, LVMH, the powerhouse behind brands like Louis Vuitton, Moët Hennessy, among others. Now, I usually steer clear of stocks that seem perpetually expensive, but something caught my eye. Over the past year, LVMH stock has taken a significant hit. The big question is this a sign of trouble or is this the golden opportunity long-term investors have been waiting for? In this video, we are going to do a deep dive. We'll analyze LVMH's incredible business, its powerful competitive advantage, and most importantly, we'll crush the numbers to see if this luxury leader is finally trading at a compelling valuation. Stick around because by the end of this, you will have a clear idea if LVMH is a stock that can help you build serious wealth. So, what makes LVMH so special? It's not just one company, it's a carefully curated empire of over 75 prestigious brands, or maisons as they call them. We are talking about 5 major segments: wines and spirits with names like Hennessy and Moët, fashion and leather goods, the cash cow with Louis Vuitton and Christian Dior, perfumes and cosmetics, watches and jewelry, home to titans like Tiffany and Bulgari, and selective retailing with Sephora. This diversification across different luxury segments is a massive strength. A slowdown in one area can be offset by growth in another, but their true competitive advantage, their moat, is the incredible brand power they command. These aren't just products, they are status symbols, deeply ingrained in our culture for decades, like heritage, some for centuries. This allows LVMH to have incredibly pricing power. They can raise prices without losing customers, leading to fantastic profit margins. This brand desirability, combined with their global reach and diversification, creates a fortress-like business that is incredible difficulty for any competitor to replicate. Let's look at the fundamentals. LVMH is one of the most valuable companies in Europe. It has a market cap of 225 billion euros and it's trading at a PE of 18.3, which by historical means it's very low. LVMH usually trades with a higher premium because of their moat, their competitive advantage, the brands they have, and because of the quality of their management team. Bernard Arnault is known by creating a lot of shareholder value and value for himself because it's the major shareholder of LVMH Group. Looking at the fundamental on our Money on the checklist, revenue growth, it's all check marks. Revenue growth, they have been growing around 11% per year, their revenues. They have really good margins, gross margins of 67% and net profit margins around 17%, which is incredible good for a company that sell goods. They have high margins because of their brand that and the premium they can have in their prices. In terms of debt, their balance sheet is incredible. They have 13.6 billion euros in cash and short-term investment, and their long-term debt is just 12.2 billion euros. So they are net debt positive. So this is very good. In terms of returns on equity of 19.5 and returns on invested capital around 15.4, which is very good. We always want to see these returns above 10%. So this LVMH has a really good track record of compounding money for shareholders. They have high returns on invested capital because they invest in their brands and they have been gaining a lot of returns on that, and that's very good for shareholders. That's why they have been outperformed the S&P 500 for the last 20 years, even though in the last 5 years they have been going nowhere. If you buy now LVMH, you are buying at the price of 2021, for example. So that's what it caught my attention, because LVMH stock price has gone nowhere in the last 4 years. So that might be a screaming opportunity, but let's look into deep. In terms of moat and competitive advantage, their biggest moat or competitive advantage is their intangible assets, their brands. It's like heritage. When you talk about the luxury market, um, uh, the consumer or high-end consumer wants to buy like status, so it's like heritage. You will not buy any other brand at a higher price if it is not a brand well known like Louis Vuitton, for example. So that's their biggest moat, and their management is top notch, I would say. So that's the most important thing in a company, in my opinion, and that's what I most like in this company. That's why I'm interested and looking into it. They've been free cash flow positive. They've been returning capital to the shareholders. They pay a small dividend, if I'm not mistaken, and they've been doing small buybacks, very opportunistic buybacks. They usually don't know much buybacks, but when the valuation looks compelling, they start doing buybacks. That's their track record in the past decade, for example. That's what they do, and I fully agree with that, because buybacks should be opportunistic. They should do buybacks like when shareholders or like to buy the company. When the company is undervalued, it's when you should be buying as an investor, and when a company should be doing buybacks as well, because it's most the best way to create value for the shareholders. So they have been returning capital. So in terms of a very high fundamental score, it's a very high quality company, one of my favorite, even though I don't like to invest in the luxury market, can be too cyclical. But when you look at this company in terms of revenue, they've been compounding for years. They've been free cash flow positive, but margins are taking a hit in the last 2 years. I would say 2024 revenue came down. 2025 it is expected to come down because mostly because of Chinese consumer. They are not buying a lot, but I would say LVMH could be a bet on China, because if you believe Chinese consumer will start increasing or feel more confident in buying goods, this could be very good for LVMH in the future. They are expecting revenues to be down this year, but resume growth in the next few years. So in terms of gross margin, very stable. That's very good. Return on invested capital, very stable as well. Shares outstanding, not going down, but not going up as well. Slightly going down, so that's acceptable. And free cash flow per share, they have a 2021, very good. So people going out of their homes after COVID, that was a big spike in their sales. So, but excluding that, it is trending higher, which is very good. So it is a very good company, a company I would like to know. But is this cheap enough to be buying? Let's look into it. Looking at the discounted cash flow, it is a French company. I would say it's a very safe company. Since this is a French and safe company, my discount rate for my base case should be around 11.2%. Higher risk than in the US, for example, because it's a French company. But even though, for my assumptions, I'm expecting LVMH to grow between 7 to 5%. Free cash flow margin of 17%. P, for my base case, I will assume a 20p. Why? Even though this is not the best business, even though in the consumer luxury tends to be higher margins and better than other consumer sectors, it can be too cyclical. In recession, the revenues will come down and their margins as well. You can think, it's luxury. In recession, the ultra rich, the rich people still have money, they will continue to buy. It's not true at all. That's true, the ultra rich will continue to buy, but there are a lot of middle class that buy these goods to look rich, for example, and this is the biggest share of their revenue will come not by the ultra rich, it's by middle class, for example, and in recession they will take a hit. That's my opinion this. But with these assumptions, I came with an intrinsic value of 347, around 350 euros per share. Right now, the stock is trading at 458. Even though this looks cheap historically, it's not cheap enough for me to start a position. That's my opinion. I would like to see this company trading under $400, closer to 350, and then I might be getting more interesting. But right now, it is a very good company, a company I love, and I really love to own more share. But I prefer to start an entry position at a lower price. So, to wrap it all up, what's the verdict on LVMH? We have seen that this is far from a strongly company. We are talking about a world-class business with a portfolio of iconic brands that give it a nearly unbreachable competitive advantage. Their long-term track record of growth and profitability is simply outstanding. The recent stock price drop seems to be more related to a broader market concerns and a normalization of growth rather than a fundamental problem with the business itself. The fundamentals remain incredibly strong, and for the first time in a long, the valuation is looking genuinely compelling for new investors if you compare to, for example, historic price to earnings ratio. Is this the perfect opportunity? That's for you to decide based on your own portfolio and risk tolerance. But what is clear is that for a long-term investors looking to own a piece of a truly exceptional business, the current price on LVMH stock presents a very interesting entry point. This is a prime example of the kind of high quality company we look for, and it's now trading at a much more attractive price. I hope you liked this video, and I'll see you in the next one.
This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advice before making any investment decision.